In a sweeping escalation of U.S.-China trade tensions, President Trump has announced a 100% tariff on virtually all imports from China in retaliation for Beijing's tightening control over rare earth metals, the critical materials behind smartphones, EVs, jets, and defense systems. The move threatens to shake supply chains, markets, and geopolitics. In today's video, we break down exactly what's at stake, how markets are reacting, and what it could mean for tech, defense, and your wallet. To understand this, we need a quick primer. What are rare earths? Rare earth elements are a group of 17 metals, like neodymium, dysprosium, terbium, used in permanent magnets, electronics, electric vehicles, wind turbines, semiconductors, lasers, and defense systems. China's dominance. China currently controls around 90% of global refining capacity of rare earths, even if mines exist elsewhere. That makes them a choke point. Recent Chinese moves. In response to rising U.S. tariffs, Beijing has imposed stricter export controls, expanded licensing requirements, and flagged tech defense applications for scrutiny. So when Trump threatens a 100% tariff, he's responding not just to trade imbalance, but to what he sees as China weaponizing rare earths as leverage. What Trump's new tariff means. Let's break down the implications of a 100% tariff. 1. Imports become prohibitively expensive, doubling the cost of every Chinese product imported into the U.S., from electronics to machinery, will ripple through every supply chain. 2. Supply chain shock for tech and defense. Because many electronic components and defense systems rely on rare earth-based magnets, a tariff could stall or derail manufacturing. 3. Incentive to localize rare earth operations. The U.S. will likely pour resources into restarting domestic rare earth refining, mining projects, and alliances with non-Chinese suppliers. 4. Retaliation risk. China could respond with counter-tariffs, export bans, or other trade tools, further escalating a trade war. Markets have already taken notice. U.S. indices fell sharply following the announcement. Tech stocks with heavy China exposure were hit particularly hard. Meanwhile, U.S. rare earth companies spiked on speculation of increased demand and government support. But there's more. The tariff is not just economic. It's deeply geopolitical. It signals a starker push from the U.S. to decouple from Chinese dependency in strategic materials. Reactions and risks. Here's how key players are responding, or likely to respond, and the biggest risks. China's response. Beijing has already tightened rare earth export controls, requiring licensing and excluding defense applications. Analysts say China might retaliate with counter-tariffs, bans on rare earth exports, or other trade tools. U.S. industry and allies. U.S. automakers, aerospace firms, and tech manufacturers will face higher input costs and supply delays. Countries like Australia, Canada, and African states with rare earth resources may be courted as alternative suppliers. Regulatory and diplomatic pressure. The World Trade Organization could come into play, legal challenges may arise, and diplomatic routes may open or close. Risk number 1. Inflation and recession pressure. Tariff hikes tend to push prices higher for consumer goods, compounding inflation. Combined with supply disruptions, it could slow growth. Risk number 2. Escalation spiral. If retaliatory moves get out of control, the conflict could hurt both economies and global trade. Risk number 3. Delays in U.S. ramp-up building. Effective rare earth mining and refining operations takes years, permitting environmental review, scale, expertise, so the U.S. may struggle to replace Chinese capacity in time. Risk number 4. Gray zones and third-party sourcing. China could export via third parties or restrict materials more subtly. Also, some rare earths are hard to substitute, meaning industry may suffer even if tariffs are eased. In short, Even if the U.S. can build more secure supply chains over time, the short to medium-term pain for consumers, firms, and markets could be real. Scenarios and what to watch. Let's walk through possible scenarios and what signals to monitor in the weeks ahead. Scenario A: de-escalation and negotiation. Trump might soften the tariff stance if China reverses export controls or offers concessions in a summit or bilateral talks. Scenario B: gradual escalation. Tariffs remain and China retaliates, but both sides calibrate to avoid full-blown conflict. Scenario C: full-blown trade war tariffs increase further. China bans rare earth exports, both economies contract, and global supply chains fragment. Key indicators to watch. Official Chinese announcements on rare earth licensing or export bans. U.S. Treasury, Commerce, White House updates on tariff implementation. Responses from major exporters, Australia, Japan, African suppliers. Stocks of rare earth, EV, semiconductor, tech, and defense sectors. Inflation, consumer goods prices, and industrial production data. Diplomatic summits or back-channel negotiations. If China reverses course or proposes a compromise, the 100% tariff could be softened. But if they dig in, we may be entering a new phase in global supply chain bifurcation. What it means for investors and consumers. Okay, so what should regular investors and consumers take away from this? Investor angle. Watch rare earth miners and suppliers. They could benefit from tight supply. Consider diversification into supply chain plays, strategic minerals, alternate geographies. Consumer, industry angle. Expect rising prices on electronics, EVs, appliances, and parts reliant on rare earths. Companies may delay upgrades or new models if parts become scarce or costly. Governments and firms might accelerate local or allied sourcing strategies. Long term, this could accelerate the global de-Chinese shift in critical materials. Nations may aim to control more of their own supply chains in minerals, semiconductors, energy, and high-tech components. This 100% tariff move is more than just a trade tactic. It's a bold gamble. If China retreats on rare earth restrictions, it could be seen as a victory. But if the conflict escalates, the fallout may ripple across industries, markets, and geopolitics for years. We'll be watching developments closely, and we'll bring you timely updates. If you liked this breakdown, hit the like button, leave your thoughts below. Do you think this tariff will stick or backfire? And subscribe so you don't miss our coverage as this story unfolds.